Okay, I'm out here with Jose Garriga, right?
How you doing?
Thanks for coming on with us, buddy. This is the back shop powerhouse right here. Jose's been on in this type of business for how long?
Altogether about 11 years.
11 years. And you've worked for Option One.
Correct.
Who's a couple of the other companies?
Conseco Finance.
Okay.
And First Palm Financial Services.
Okay. Now, were you always in the loan modification mitigation business, or
That is correct. I mean, my years of services have always been in the default area of loss mitigation, bankruptcy, and collections.
Wow. Wow. So how many loan mods have you mitigated?
In the last year, close to 1,000.
Wow. 1,000. So if I send them to you, you can get them done if they're doable.
Is it doable? Yes, absolutely. There's a way.
So these other guys, they kind of pre-qualify them, make sure they're doable, and then you just get on the phone with the banks and.
Absolutely. My job is, as they receive the information, is to go over the information, see where we at, forward the information to the lender with a letter that is made by me, explaining the situation and what am I looking for, based upon the investor guidelines.
Right. Now I asked you the other day. I said, could I be a loan modification for for my second mortgage? Could I reduce it? And you said something about it doesn't hurt to ask.
Absolutely.
I mean, expand on that.
A lot of these mortgages are underwater. A lot of these lenders, most of the second loans are HELOCs, home equity line of credits, at which the lenders these days are willing to settle pennies on the dollar to try to write the remaining part of the loan and don't worry about that loan any longer and move on.
What's some of the high-tech stuff that you would know that a guy doing a pre-qualification or somebody sitting at the house wouldn't know about doing a loan modification?
Well, the main thing is we need to ask our consumer, the borrower, is, are you an adjustable rate mortgage? If your mortgage is going to adjust in the next 60 days, not because you're not delinquent doesn't mean that the lender is not going to review your loan. The lender knows that in 60 days from now, you're not going to be able to make your payment. So now the lender these days are working with those type of people to avoid the delinquency.
Now, you said you've been doing this for years, but have you seen the lenders getting a little bit easier or a little bit more willing to work?
Absolutely. I would say the last 6, 7, 8 months, lenders are now more flexible with different type of modification process because they're seeing a lot of the people that are on these R loans that get into a job within the next 90 days. They already know that the customer is not going to be able to afford it because they're already seeing the trend on making the payments late.
Right. Just give me an idea of the size of a payment. Like they had a $2,500 payment, and after your loan modification, they have a
Oh, absolutely. There's plenty of cases of those on which your customer will have a mortgage payment of $2,500, and now with a new modification, either by principal reduction or either by REIA modification, a new payment with taxes and insurance included would be $1,700 a month.
So they would save $900 a month.
Absolutely. I've seen cases where the customer would save over $1,000 with their new Obama plan.
And it would be on a fixed mortgage or on a variable mortgage?
It depends. Some lenders will do a 40-year fix, or some lenders will do a step rate modification, in which for the first 5 years they will have 4%. After the rest of the remaining part of the years will be at a fixed rate of maybe 5.5%.
What is the cheapest interest rate you've seen a lender come up with recently?
Yes, Aquin. But again, it's all based driven by the investor that did a 5-year rate modification at 3%.
That's amazing. So you think you can handle 100 accounts a month?
Absolutely. We have the technology, we have the staff to handle as many cases as we can get in.
Wow, that's awesome. So some of these realtors may have some people that need to be sending them your way, and you can handle it. No
Absolutely.
problem.
And we don't always work on modification. We always work on the short refis and the short sales. We are experienced enough to handle those cases for that individual.
So if a guy's not a candidate for a modification, you may say, hey, buddy, you need to get to a short sale, and you just send it to one of your other departments, and you guys just handle it.
Absolutely. And we handle just the same case we handled a regular modification. And one of the new fields that we're trying to explore also in the commercial properties, and which now a lot of the commercial property owners, they underwater
right
under commercial properties, and now the lenders are working also with the commercial properties to try to do a principal reduction to try to get a better loan, or either by waiving the penalty fees with the bank so they can refinance the commercial property.
This is the kind of guy we want doing our loan modification right here. Jose is definitely a professional. So thanks for coming
It's a
on with us,
pleasure.
buddy. Okay,
Thank
positive.
you.